Federal Reserve continues their tight monetary policy, putting pressure on equities, stressing bond markets, and increasing the burden of public and private debt. This Fed policy, along with mounting national debt, creates even more challenges and uncertainty for the ordinary investor and financial institutions. To help make sense of this present economic environment, we will hear from economist, White House advisor, and author Jim Rickards, macroeconomist Gareth Soloway, and macro analyst and investor Lyn Alden.
But we are seeing a lot of dysfunction in the treasury market. Part of the reason is when the dollar gets very strong, the foreign sector generally stops buying treasuries. The main reason why, say, foreign central banks hold treasuries is so they can sell them if they need to defend their currency at some point in the future. And so we kind of have an issue where the Fed's not buying treasuries, the foreign sector's not buying treasuries, US banks, due to SLR regulations, are not really buying treasuries. The end game of a very, very indebted sovereign country is that they have to do often QE type of activities even when inflation's above target, just to support the bond market.
I'm pretty bullish on gold. I'm starting to see it confirmed in price. And so, for example, with a declining PMI, basically risk off of environment, gold kind of finally has its chance to kind of decouple from S&P 500 to the upside. And so that combination of decelerating economy, and if the Fed indeed is unable to be as hawkish as is currently priced in, that could be a bullish catalyst for gold. So it's really once the other things start to encounter weakness that people can look around and say, well, what's doing well? And one of them is, I think in this declining PMI environment, is gold.
Being a technical chartist, that's the chart is the first thing I go to, right? And you look at the chart, you had this mega run from 2018 in gold all the way to the highs in 2020. And since then, you've stayed in the upper range. I mean, even though, so many people have said, oh, gold hasn't done anything, it's dead. But really what it's doing is digesting that move from the lows of 2018 to 2020. So that digestion period is looking like it's coming to a close. We're borderline breakout, short-term breakout here on the chart. So I think that puts the onus back on gold to be a better performer. So again, between charts and just looking at what is going on, I think you have a very good bull case for gold. And overall, remember, I'm thinking that gold will be the best performer. But to be the best performer, when I'm thinking that the NASDAQ, S&P, and Bitcoin are down for the year, it doesn't also say it has to do a whole lot, maybe even just stay here or go a little bit higher.
It's interesting. I find that people abroad have a better understanding of gold than most Americans do. But it's basically 40 years of miseducation. 1971 was the last time the United States was on the gold standard vis-a-vis its trading partners abroad. Since then, really two generations of economists led by big names like Milton Friedman and then followed on by other prominent economists have taught over and over that gold has no place in the monetary system. It's not elastic. It's not able to expand the money supply in times of crisis. It's the famous Keynes phrase, it's a barbarous relic, etc. So you have literally generations of very bright college students and everyday Americans who have been taught that gold is something from the past and has no place in the monetary system. Now, every one of those things I just said is wrong. It's a little bit of, you can call it brainwashing, miseducation, conditioning. And then you say, well, why is that? What's behind that? Well, of course, the PhDs and the central bankers, they would like a fiat money standard because they control it. You can't control gold. I mean, you've got to go dig it up and mine it, and it's a costly process. And so people, it's basically a power grab by those who are control the levers of the money supply. And I don't think it's any secret that if you control money, you control behavior, you control politics, you control economics. So the PhDs have taken over money, but they've taught everyone that gold has no place.
Cash isn't better than gold for me. Obviously a well-diversified portfolio is important. And I think it's important to have some cash on the sidelines, right? And most investors don't understand that when you have cash on the sidelines, it actually allows you to take advantage of great opportunities, right? If you're all invested, what are you going to do when the next great opportunity pops up? And we don't know when that will be. So having some cash, yes, but overall, if I had to choose between cash and gold, I would go with gold.
What I recommend to investors, you want about 10% gold. Maybe a little more if you want to lean into it, if you have a higher risk appetite. But institutional allocations are about 1.5%. So I'm recommending 10. So there's a long way to go there. People need to get a lot more gold. It has gone up about 600% or more since 1998. But I would see it sort of chugging along with a lot of volatility. And then I think we're getting close to the stage where it's just going to gap up. Meaning, one day it'll go up $100 an ounce and that'll make a lot of headlines. And the next day it'll go up another $100 an ounce, and that'll make headlines, and all the talking heads on TV will go, oh, it's a bubble, don't be a fool, etc. But then, the next day, boom, it keeps going. Then what happens is then people wake up and say, oh, gee, I better get some gold.
Gold's track record is clear, and so is the US dollars. As the Federal Reserve props up the strength of the dollar with high interest rates, this lowers the price of gold. This is the opportunity. With the eventual Fed pivot and inevitable money printing, gold will rise. To paraphrase the famous hockey player, Wayne Gretzky, I skate to where the puck is going to be, not to where it was. If you are interested in protecting and preserving your wealth with physical, precious metals such as gold and silver, whether in the form of private investments or a Gold IRA, see the links in the video description to see the best Gold IRA and precious metal investment companies that we have personally researched and vetted. To attend an educational webinar on gold investing held by Augusta Precious Metals, see the link in the video description. Thank you for watching.